now turn our attention to Pan-African Resources. The most recent news out from Pan-African Resources is that its Barberton Mines has secured final credit approval for a 3-year revolving credit facility to the tune of around 150 million rand. Keith, I'd like to start off with you. It's quite a fascinating company because it's got that gold elements, and it's also delving into platinum, right?
Well, what's particularly fascinating about it is it's got South African mines and it's making a profit. Which Harmony is finding a problem, which previously talking about.
And most South African gold miners finding a problem to make a profit.
Absolutely, but Pan-Africans actually make a fantastic profit. Their risk is that they're a 2-asset company at this point, and they've got their Manica exploration project. They've got the Phoenix Platinum PGM where they're retreating the tailings coming off, and they've bought that. I mean, it's going to add about 20-30% to the fair value of the company. And then you've got the Barberton mine, 100-year-old mine. They reckon there's another 20, maybe 30 years worth of that. But you've got a lot of history, you've got a lot of grades, you've got a lot of geological work. It's a very low-risk mine, and they're managing to operate that profitably. The Phoenix Platinum project is coming online. They've been building it. It should be coming online the later part of this year. So you've got an interesting mix between gold to platinum, but at the same time managing their risks. They're sitting in the relatively above ground, a low above ground risk country, and South Africa is not the same as mining in the Congo. Hopefully there won't be a revolution tomorrow.
Well, it's quite fascinating you say that, because Paul Walker from GFMS, when you look at their platinum and palladium survey, it seems that one of the big things that is also driving up the platinum price in particular is there's still a lot of concerns about the risk factor within the South African space. Isn't that interesting, Frank?
Yes,
I mean, when you look at, Pan-African has got their finger in platinum, and platinum we have seen a surplus over the last few years.
Yeah. Look, the dip in the platinum price, which is taking place now, is temporary. It will continue. It will continue to rise. But Pan-Africa's got gold. It's got platinum. It's got chrome. But how about this? This company is another one of the scourges of your big fund managers and things like this. This is because it's an exploration company and perceived as very risky and all of this. It's debt-free. It's unhedged. Cash on hand of 150 million. I mean, what more can you want? And it's producing. Its Barberton mine profit is up 54%.
And it pays dividends.
Yes, 100,000 ounces of gold per annum. They've just commissioned the earth moving for the Phoenix Platinum operation, and they've also just converted their prospecting license to a full mining license in Mozambique. So that's all now going to start happening. This debt that they've just secured now is for future operations and funding organic growth and things like that.
Yeah.
So this is a really smart little company.
So in other words, it's hot.
It's up 75% in the last year alone, and it's on a price earnings ratio of only 8. And you're still getting a dividend yield of 3.
So you'd be buying into Pan-African Resources?
I don't need to buy into it because I've got it already.
Oh, right. Are you talking up your own book? Should I even ask you that? Keith,
are
you going to be talking up your own book?
It's in my book too. I like it.
Okay.
I called it a year ago. I still like it. The market hasn't fully factored in the platinum project. I believe they're waiting for the first tailings to be treated, and perhaps that's going to de-risk it. Point being, you can get it cheaply. It's making profits. It's well unhedged exposure to precious commodity prices, and it's actually relatively liquid for a small cap, so you can build a decent position.
So hot on that. We're now turning our attention to IT stocks, Digicore and Mix Telematics, and we start off with Digicore. Keith, over to you. And I know that this is a space that you really look at. We know the likes of Digicore really focuses on fleet management and vehicle and personal tracking business, amongst other things as well.
Yeah, well, Digicore's main product is C-Track. A lot of people know it because they have it in their cars, and that's their stolen vehicle recovery side. They also have a fleet management side, where they essentially do the same thing. The difference is they have the software in the background where they can track fleets, manage movable assets, give the most efficient parts, and that's obviously selling into the corporate. Market. What's interesting is their product is actually oil sensitive. The higher the fuel price, the more people become cost sensitive to the logistics half, which is often vehicle orientated. And so the more the fact that Digicore comes and says, with C-Track, with our fleet management, we can save you money, the more people are interested in buying.
Fantastic. Frank, I mean, your view on Digicore, a stock, do you look at the stock? Is it part of your stable?
I used to, but not recently. The share is too illiquid to be on my radar screen. But how's these numbers? It's up 900% in the last 10 years. It's been up 3,000% in those 10 years. So it's gone straight up and come straight down. But it's still up 900% in the last 10 years. So you buy a little share like this and you put it away for the long term, you can do very well out of it. You can beat the rest of them hands down. At the moment, it's kind of stuck around the R3 sort of level. It's not going anywhere in a hurry. There are a couple of strange things about the company that I sort of question. It's operating in Mexico, Malaysia, and the Middle East. What a strange mixture of places to operate.
You hold Digicore, if I'm not mistaken.
No, don't hold it, but
okay.
I've covered them.
You've covered them. Okay, so would you say strange places or just strategically, placed?
Well, first of all, emerging markets. Second of all, you've got a, believe it or not, the technology, telematics technology, the founding base for it was in South Africa because especially still in vehicle recovery, we have all the crime. And a lot of hijacking. So the guys have cut their teeth here. We are first movers in terms of the world. Digicore and what we're going to talk about later, Mix Telematics, they were actually first movers in the technology space in a relatively short span. So the ability to export it, when you're going to start your export scheme, you unfortunately have to start in some territories. It's going to be a bit of an oddball for the next number of years.
So also fierce competition in this industry. Based on that, Keith, your view, Digicore, why haven't you bought it? If you've covered it, why haven't you bought into the story?
It's very sensitive. It's got a lot of operating leverage. So far more than Mixed Telematics. So in this sense, you have to see those volumes ticking up. And they've gone into the UK, which I thought was possibly a wrong move. They should focus more on the emerging markets. There's been and of course they had a rights issue for 90 million that's underwritten by Coronation, so the dilution still has to come through. So cautious. Still very cautious. I like the company, like the technology.
I think you came up with that statement.
The warmer drawer, yeah.
Hot or not, Digicore.
Yeah, that was Bronwyn. She said I'm not allowed to use that phrase. No, Digicore for me not hot at all. Okay. It's too illiquid. I don't like them. Maybe the reason why they're moving into Mexico is because it's such a high crime area, and that's their area of
Interesting
business.
Notion there. Okay.
Yeah.
Not hot.
It's done okay. I mean, the most recent results, operating profit up 15%.
We don't have much time left, but we're going to be touching on Mix Telematics, and I know, Keith, you know quite a bit about this company. Basically, in the same sphere.
Absolutely.
In which Digicore operates.
Directly competing on most fronts, and actually in some territories outside of South Africa. The complications come in is, first of all, the technology, which one is more competitive, and that's often hard to judge. I prefer not to go on record saying that. But what is interesting, beyond the technology, because that's obviously what they're competing on, is actually how they've financially structured it. Mix has a lot more variable costs in their model, and they had a lot less debt. They haven't needed to do a rights issue. And they seem to have been more successful at building up an annuity base, and of course. But their share price has been less volatile and more flat based on that. Is
Mix Telematics also very sensitive to the likes of fluctuations in the oil price, the way that Digicore sort of...
Yeah, the demand for their good is, but also a lot of their revenue streams are coming from annuity bases overseas, so in a way they become a rand hedge. The problem being some of their overseas operations actually make losses. So do you really want a rand hedge exposure when you're having exposure to a loss? Moving overseas is not always a good call.
Frank,
I think the share price speaks volumes as well, as always, and it's the share price has really done nothing in a long period of time. It's illiquid, that also speaks volumes. Digicore is a better play, but for me, not hot.
Not hot. Keith?
Well, where vehicle sales are actually starting to tick up, oil price is high. If I were to be in either one of these shares, it would be rather Digicore actually than Mixed Telematics. And I've already said cool to Digicore, so I'm gonna have to be cool on Mix.